For the first time ever, I am thrilled to say we have an official sponsor for the Dirt Talk podcast, and that's Ariat. I've worn Ariat boots on every job site I've visited over the years, traveling in them across 5 continents. More importantly, I have yet to find a single project where working folks, unlike me, are not wearing Ariat boots and workwear in every condition imaginable. And there's really good reason for that. And that's because it's phenomenal stuff. And the more I've learned about Ariat and the company, the more I've loved their brand. So with this, Ariat is offering any Dirt Talk listener 10% off their next Ariat order at ariat.com/dirttalk. That's 10% off boots, jeans, and workwear at ariat.com/dirttalk or at the link in this episode's description. With that, let's get to the show. I was listening to Oprah, this was years ago, talk about her interviewing strategies because she's very good. Yeah, she's pretty good. And she said she never works on questions because if you're thinking about the next question you're going to ask, you're not listening to the conversation, which is what's supposed to lead you to the most important thing, she says, which is the next question. So she says in a true conversation, an interview, the conversation itself leads you to the next questions. But I do this all the time. I think everybody does. It's like you're having a conversation with somebody, but then you think of what you're going to say next. And then all you're thinking about is just what you're going to say next. And you're just waiting for the next person to stop so you can say it.
And you're like, what did they just say? I bet you was something cool.
And then you're missing the whole thing. I still do that all the time.
I know. I do it with my kids mostly more than I do even I'm more cognizant of it when I'm talking to someone for like work.
Yeah.
Like I need you listening. You're in a different frame. But when I'm with my kids, it's almost like I have to be even more disciplined to think, don't just say what you want to say. Because they're the ones listening. I mean, they're my daughters. I want to hear what they have to say. Sure. But yet what I'm more my tendency is to be more focused on what I want to project down their throat. Mm-hmm. And I got to be like, don't do that. Like whatever they're saying. And they're girls. I only have daughters. So I actually don't know how to relate to that at all half the time. So I'm just listening. Then I listen to my wife. What does this mean? I'm trying to read. But when they're talking, it doesn't necessarily flow in like this organized, systematic manner that you might think of a business conversation. It just flows. And if you don't listen, you'll miss all of it. Well,
and you're not necessarily like in a business conversation, you go in with an objective a lot of times. Okay, what's this meeting about? What are we trying to achieve here? And if you don't have that objective, then you don't have the meeting a lot of times.
That's right.
But a conversation with your kids, it's like, there's not really an objective. Like, so what are we trying to achieve? How old are they?
17, 15, and 13.
Oh, good. Okay. Yeah. So all in their teen years. Then.
Yeah. Their objective, as I've now understand, is to be heard.
Yeah, sure. Yeah. Yeah.
They may have things they're saying, they may have points they're making, but what they really want is for me to listen to them, not answer them and not project down their throat, which is what I'm thinking is like, okay, how can I help them? What do they need me to say? What do I want to say to them? And if I get going on that route, I don't hear anything they say. And then all I'm sending them is a message like, their dad doesn't listen to them.
But that's easy to do. Or even like just being cognizant of when you're on your phone, like that to people says that even like they've done the studies with animals and how they react to people on their phones. It's like, it's just you're so locked in on this one little screen that everything else around you is like, oh, I'm not important.
Yeah.
And so like this, it's like when we sit down on the podcast, I always just have the phone out of the room, it's so nice.
It's peaceful.
Yeah. Because this is really the only time other than the airplane in which I just have an hour plus, without my phone. I don't have to worry about it.
Well, now on the airplane, they put Wi-Fi on there.
Yeah.
When I was first started traveling, this is like, let's say 15 years ago, there was no Wi-Fi. And so one of the coolest things, I remember like the exercise I needed to do was to download all my emails into Outlook so that I could get on the plane and I would have this opportunity to clean them, the whole thing in a massive amount of time because no more are coming in.
Yeah.
And then when I'd land, they would all go out. And so people would know when I landed, but I also had this it was like this peaceful feeling. And now you go on and you log in and it's like the worst. You're just there's that benefit's not there anymore. You're just there. So I try not to actually use Wi-Fi on a plane.
I don't. The nice thing is and not the nice thing, but I have to take Dramamine because I get so motion sick, and it just turns me into a zombie. I'm just so zoned out. So like my brain just turns off when I go into the airport, and then I walk out of the airport, turns back on. It's really good because
cool.
I can do a 12-hour travel day without even like thinking about it now. I mean, it is just gravy. But then that means I can't get anything done on airplanes. But what I in that vein, what I have done on airplanes is my photos on my phone. It's just a disaster. They're just tens of thousands of just mostly nonsense within the photo album. And so I will just go photo to photo to photo to video to photo, and we'll just delete stuff while I'm on the phone or while I'm on the airplane. And then I'll keep like in my notes the dates in which I've cleaned. So it's like I've done from, November 23 to February 24. Okay, cool. And it's way reduced. And then I just kind of make my way through my whole photo album.
Do you keep them all, or do you delete them or put them in albums?
No, I really just have like a running album, like along the timeline. Mm-hmm. But like I said, most of it's just garbage. Or you'll take family photos. You'll take 33 photos, especially with teenage girls. Like, you don't just take one photo. That is a rookie mistake. That's something dads do. It's like they're going to take 48 of them, but there's only one or two in the bunch that you want to keep. So you don't need all 48.
That they all like, too. Yeah. If you're lucky, there's one they all like.
Yeah.
One person's eyes twitch, one's open, and you're like, I don't want that one. I look terrible. And you're like, oh my God, I actually think you look beautiful.
Yeah. But what do you know?
I don't know nothing. Yeah. That's what I know. I know that in their mind, I don't know anything. Uh-huh. That's what I know.
Well, going to what you do know professionally, how do you explain to people if I'm sitting next to you on an airplane and I say, so what do you do for work? How do you explain it to somebody?
It's a great question because it is unique. Everybody, the easy button is I'm in specialty finance, and I guess it depends if I want to talk to that person next to me on the airplane or not.
That's the answer you give if you don't.
That's the answer I give, and then I like go back, put my head back down, and wonder if the question's going to come again. But I tend to be probably more talkative than less talkative. Yeah. But honestly, what we are is a specialty. We are a specialty lender. Ask somebody what specialty lending means, you might get 50 different answers. But what I describe it to people as is we are really good at helping companies that are growing. They've figured out what they're doing. We're not for startups, but they know what they're doing. Yeah. They know how to perform, and they're growing, or they have a desire to grow. That meaning they have a lot more opportunities. So if we're talking construction, it's very easy. Construction subcontractors, they start to know how to do their work. They do a couple jobs, then they start to get more jobs, and then they people want to give them more jobs. Then they want to have bigger jobs. So what we do, in a nutshell, is we're great at helping companies execute on the revenue cycle that's been given to them in the form of a project, a contract, a master service agreement, a new customer. What is a revenue cycle? Revenue cycle is I got this opportunity today in a contract, day one. Mm-hmm. I've executed the contract and I've been paid all my money. That's the last day of the revenue cycle.
Sure.
I'm going to have costs associated with making that money that I've now contracted to do and performing.
Yeah.
When do I have to spend those costs? How do I know how much of those costs I have to spend? Am I cash flow positive? How much profit am I going to make? When do I even realize all those things? By the way, what's the difference between profit and cash flow? That's like, you mean I just don't have it all? Mm-hmm. And what we do is we analyze that for them and show them exactly how much you're going to need to invest into that project, when the source of funds is going to come in from the project. And then we can become part of the solution if there's gaps on a weekly basis. So construction's a natural fit for us because you have a lot of money going out. Your employees and your subcontractors like to be paid, weekly or bi-weekly. They don't necessarily want to be paid when you're paid.
Sure.
And your material suppliers need to have things ordered. There's different structures of terms for every way you engage. And the more complex the business, like construction, the more of those structures you have to fit into that revenue cycle.
Yeah.
The engagement between when your customer is going to pay you and when you can bill them is literally the easiest thing to figure out. Mm-hmm. But how do I order from this one supplier? And by the way, I have 10 of them. How do I engage my direct employee, staff, management, but also I have 4 different subcontract labor forces that I may engage at different spaces, and I have terms with all of them. putting that in a spot where you can see it is one of the most difficult things to do in any business. If you and I ordered computers for a living and we ordered them from Dell, we delivered them when we invoiced, that's an easy revenue cycle, right? Yeah. Finished good, gets delivered.
Yep.
Obviously, construction's not that way. Manufacturing's not that way. And so what we do is we basically are experts at figuring out the revenue cycle with them, using their information. In this case, would be a bid sheet and a schedule. That's pretty much what everybody gets.
Mm-hmm.
And then saying, okay, you know what? Yeah, it's $1 million job and you have $800,000 of cost. Do you have to invest all $800,000 before you earn the $200,000 that you intend to make? Or do you have to only invest $200,000? Figuring that out in advance prior to being midway through the job is a vastly different exercise.
So you're not just lending to them, it's also value add by helping them work through the cash flow of a project, for example, to determine when the gaps likely, and you can't always perfectly determine when those gaps will occur in construction.
Nope.
But when likely, okay, cool, you have, probably the beginning of every project is the biggest gap throughout a project's life cycle, if I were to guess, because you have all the mobilization, you have all of those, you got to show up and start doing the work. And then at best, you can submit a pay application for the first 30 days and then hope you get paid quickly. But with public work, sometimes it's 90 days out and then you don't get paid for 90 days. So you can be at sometimes up to 180 days, if not more, before you're getting that first dollar, which is really tough.
Yeah. And in a that's probably the worst scenario, right? The 100 days. The average scenario might be closer to 60 to 75. And people are like, wow, that's a lot. But well, think about 30-day terms in construction, most people would sign up for the most part. Mm-hmm. Well, if we started a job May 1st, we'd work all month. We'd put an invoice in at the end of May. We wait 30 days.
Yeah.
It's now, all of June. You're getting paid July 1st. There's 60 days.
Mm-hmm.
If that stretches even 30 to 45, which again, most people would be pumped to take, that's 75 days of cost going out. Even if it's just your own direct labor, it's still a pretty sizable number.
Yeah.
And since construction tends to be a larger dollar volume of project size, there's more money being moved around. It costs a lot of money to build things, It's not like we're not building water bottles, So that makes it more stressful, more difficult to manage as well. So where we learned it, and I'd love to tell you that we started out to be this company that was going to say, oh, we're going to help all the people begin with. We're going to create these cool cash flow tools. No, we started out as a lender, not knowing anything, saying, oh, there's a problem here. Folks need money up front. They have contract. We can give money to help the contract. But what we learned quickly is when you try to execute in that revenue cycle. I'm always going to go back to revenue cycle because I kind of coined that term. It's not a term I coined, but for construction, it's a very rare term used.
And revenue cycle, to put in layman terms, is a project.
It's a project. I start the project when I get awarded it. I finish the project when I'm paid my last dollar. Because revenue cycle to me, we're talking about revenue. We're talking about the flow of money in and out of that project. So therefore, revenue cycle. A lot of times you're thinking about it in terms of construction. But we're talking about cash. That's where the pain comes. So revenue cycle is a project defined as starting when I get my contract, because there's always pre-construction costs. There's costs way before you start a job site.
Well, there's costs to bid work.
That's right. And the last day is when that last dollar comes, usually in the form of retainage. And why is that important? Well, if that's a lot of your profit, we need to count it. That's the last day. And so we started out thinking, okay, yeah, it's perfect. And I grew up, my dad was a construction contractor. He was a glazer, glass and aluminum. So if you think your average, maybe 3-story curtain wall or the shopping center, all that glass and aluminum doors, insulated glass, that's kind of was their specialty. So I understood the pain points just from my dad and working on the sites. So when the idea came, we were like, yeah, we can solve this problem. There's a clear problem. We understand it. But we thought early on, we've been at this 11 years. When I say early, I'm talking the first 8 years. And we thought, yeah, you can just provide the cash. The business owner will use it exactly how they need to. And of course they know what they need because that's what they do.
Yeah.
Well, that's not really the case, because building a building, managing a team, and managing cash are 3 totally different skill sets, which you learn the hard way when you're an entrepreneur or a leader in a business, or you just don't have experience to that.
Mm-hmm.
And so what we learned was we're lending those dollars, but they're not all coming back.
Mm-hmm.
Why is that?
Mm-hmm.
So we started figuring out what we needed to know to be able to make a good lending decision. And it turns out that what we need to know is the exact same thing that the business owner or our client needs to know.
Mm-hmm.
And so when we started to share that information with them and build tools around it so we could figure it out, like first you start off, hey, do you have a cash flow tool so I can see what your revenue cycle looks like? And they're like, tell me, I understand what that is. We're like, oh, like you have the bid sheet and you have the work schedule, but how's the money got to flow on it?
Yeah. Sometimes
people have that. Sometimes they don't. It just depends on where you're at, what your skill sets are, the size of your business, etc. So we created these tools, and then the coolest thing happened, Aaron. We'd show everybody that, and they would be like, wow, like, I'm not doing that project. That's terrible. I'm not going to do that. You're like, wait a minute, you signed up for it. Like, yeah, but not this way. Give me a minute. I'm going to go back. They'd go renegotiate terms with their suppliers.
Sure.
They'd go they'd switch to contract labor versus direct labor. I'm moving my direct labor over to this other project. We use subs here. All of a sudden, they're making these like very decisive decisions that they would have never made without the vision of the information in front of their face.
Yeah.
And it was the coolest thing that happened all of a sudden. So now they come back and like, hey, I'm going to do this and this. Tell us what the cash flow model looks like. Actually, using that simple example, you don't have to invest $500,000 in that $1 million project anymore. The one with the $800,000 cost, it's actually only $175 now.
Mm-hmm.
Perfect. They're like, cool, let's do that.
So. I guess going back to basics here. Where does the money come from that you're lending?
So we're the direct lender. Okay. We are the lender. We make the decisions on the loans and we service all the loans.
So did you start with like some money and put it out once and prayed you got it back and made a little bit and then just build it upon there?
Yeah, I tell this story a few times, but it's a $40,000 loan to an electrical contractor building a Goodwill store.
Okay.
4 of us, that's kind of we're all together in the beginning. We'll make these loans kind of as a habit. We each put in $10,000. Of course, the $40,000 loan went out, and just like any first time, it worked perfect.
Sure.
It was great.
Yeah. So what could go wrong?
Yes. 80, 90 days later, the $40,000 came back with the interest and principal.
Yeah.
The electrician's happy. They finished their job and off we go.
Uh-huh.
Over time, just like I always like to share the stories because I'm no different than a lot of the construction contractors. I jumped into a finance business with no finance understanding. Really. Yeah. Like there was
just probably a good thing. Yeah.
It was good because if I had a pre-programmed idea of finance, I'd probably be like everybody else and never go into financing construction subcontractors. So the dumbness of my naivety was helpful in the journey of it. But as you start to move forward and we were making loans, we realized like it's definitely a big problem. And then we just didn't know how to really help figure it out. And so we made one loan at a time. And like you said, you make one loan, you watch it to fruition. This is more of a hobby. We all had other jobs. So we make one loan, it comes to fruition. And then eventually, and I don't know if I can tell you the whole mobilization funding story if you want to know, but eventually what we realized is there was a problem. And we realized there needed to be some tweaks. And then we realized there was a portfolio of loans out there, and the person that was actually running it ultimately just like quit one day. Uh-huh. The person running mobilization funding in the day-to-day. And so me and one other gentleman who had kind of raised the money privately, like you asked where did the money come from, we were just friends and family. Hey, we're making these loans. You guys want to get a return? We're going to make this loan to this concrete masonry contractor, this electrician, this plumber. And so one loan at a time, we'd kind of raise the money, put it out, pay everybody back and do the same thing. And one day that didn't work. There was a problem, right? And so then we realized we had to raise some more money, and we raised more money, and we raised more money, and we'd make each of these loans and kind of just fill the gaps of losses with new loans and profits. Yeah. Paying people back all the way. But where we really had the issue and realized it was a business and went from habit to business was when the one person running the company at the time just quit. Like literally said, I quit and just went dark. And me and one other gentleman had to run around and find what at the time was about $2 million worth of loans, maybe $100,000 to $300,000 at a clip, maybe actually less, $50,000 to $300,000, depending on who they were. Reach out to them, find those dollars, talk to them, hear their stories, understand what they were trying to do, why things worked, why they didn't.
Because you didn't even know why.
He was running it. I was a med device sales rep.
Yeah,
I was just, as I used to say, like slinging implants for orthopedic knees and hips around.
Yeah.
And in those conversations that we realized, like, this is a real problem. This is really helpful. It was just really poorly executed on our part, but it's a great business. And we made the tweaks, opened an office, raised some more money. And then that's when we opened a website and started.
Wow. So these are unsecured loans?
Mm-hmm.
Okay. So you're entirely dependent upon the ultimate success of those you're lending to.
Yeah. So when you say unsecured, by definition, they're secured because you do have a security agreement with the company and like a blanket like lien on assets, but it's not like security like you're buying a new truck or a tractor and you're taking that as collateral.
Yeah, it's not as
property as collateral.
I see.
So in the lending world, hard collateral is secured, but a loan's still secured against the business itself.
Yeah. Okay. But are you, say their assets are pickup trucks, et cetera, they maybe have loans on, are you then second position?
No, we're not even collateralizing them. We're just saying we're helping this business and we take just what they call a blanket UCC position against the business.
Okay. Oh,
yeah. So it's technically an unsecured loan. I mean, if you go into bankruptcy, it's unsecured.
Yeah. Yes. Yeah. Oh, yeah.
Yeah.
Understood.
You're unsecured, but there is a security position against it.
Okay.
Where we really drive at it is that revenue cycle. So the flow of funds onto the project and the flow of funds off the project all go into a project account. And it's that project account that keeps the capital intact. So okay, if you're going to have this loan and you also have the money from the project and everything is in one place, the revenue cycle's secure.
I see.
Where our value is you have those companies that are trying to grow or they're doing the extra project. Or sometimes you may not be growing. Maybe you're a $5 million business trying to get to 10 and you have this year you're going to do $6 million and you have your $1.5 million that are going to start Q1, $1.5 million Q2 in a perfect world. And that all of a sudden gets blown up.
Sure.
Project pushes. And now you have 4 projects starting in Q2 and you're going to execute on $3 million worth of work. At the end of the year, you might be a $6 million business still, but you sure felt like a $12 million business in Q2.
That's right.
Right. And so how do you take pressure off of that? Well, if you pull all the cash out of your business to try to execute $3 million worth of work when you have enough cash to do $1.5 million, that becomes painful. And so we can help finance one of those projects without putting the pain on your business. So if you have a loan from us and you have the project, and we've built this cash flow and it works, then you don't have to pull money out of your business. You don't put stress on it. It allows you to grow.
I see. And these are, me as a business owner, I couldn't this stuff from JP Morgan.
No.
Yeah. So that's what I learned. I got into business as naive as anybody. And you need the banks because you need money, and you quickly learn that money is the oxygen that any business needs. That you learn that pretty quick. But then, young business owner, you get fooled into thinking the banks care about you and care about small business. But then when push comes to shove and you actually need the banks, they just laugh you out of the place. They're like, beat it. They don't even pretend at that point. They just tell you, we don't care about you. So if you wouldn't mind getting out of here, and when you do have money, we really, right now we finished some second fundraise, and so then it's filed with the Security and Exchange Commission. So then it becomes public information to some of these bankers, and these bankers are calling me left and right now. these private, JP Morgan private bank, thinking I have all this money, because it's like, oh, now I'm useful to you because I have money, even though I don't have the money. It's just it's amazing to me.
Yeah, our banking system is not set up for risk. That's the problem.
No,
they're not set up for risk. It's protected. The banking system is set up for consumers, the FDIC insurer. Like, you put money in the bank, it's never lost, right? That's the goal. That's the thought. Yeah,
never,
right.
quote unquote.
Never. That's the safest place to keep it. which maybe another. That's
well,
a whole other episode.
even though none of it's backed by anything anymore,
Yeah.
and there's $34 trillion of debt, et cetera. But
Exactly.
Than all that,
that's called a tangent. If we go down that, we don't need to do that, I guess, at the moment. But but we're on the same page there. But the bank is set up to be a protection place. So if they can't, and they also aren't service intensive for all, like you just mentioned. And what we do, it takes a lot of servicing. You got to work with someone. You have to understand. You're going to pour value into understanding. You got to fill not only some of the gaps in capital, you have to fill some of the gaps in knowledge and help. Like, you know, I mean, you need a complete pie. And so banks just aren't set up to do that. They might be equipped to do that, and they're not incentivized to do that. And so that's really inherently the problem. And so because of that, that's why you see specialty finance, or you see banks financing specialty lenders. I mean, it took me till 2000. We started this business in 2013 with that first loan. It wasn't until 2018 that we actually got a bank line of credit to be able to make the loans.
Wow.
And that bank line of credit was like 10% maybe or less of the size that we needed to actually make the loans. It was just start with a relationship.
Yeah.
And that loan, although they gave it to the company to use, was backed by a very like a piece of property. So it was really not like, oh, you're just make this loan and don't worry. I like the business you're in. We'll finance it. No, because banks still, even with us or any company, they can't lose the money. It has to be. They're just not set up that way. They don't charge enough, candidly, in some ways.
And they don't make their money on lending. They make their money by using their deposits to go make additional money.
To lend.
Big
correct.
picture. Yeah. To go basically invest the deposits, and they don't want to lose those deposits because then they have to, it's robbing Peter to pay Paul. And then, like what happened, what was it, last year, 2 years ago? These outflows from these banks all of a sudden come up unexpectedly, and then the banks are just insolvent overnight.
Yep. And there's poor management of their own balance sheet, just like a regular business. You didn't manage it properly. And so you hit the nail on the head. And so that for that reason, when you go into the bank, you say, hey, look, I have this great opportunity. I'm growing. All they want to look at is what you have been doing the previous 2 years, not where you're going 2 years forward. And if you're a growing business, what you just did 2 years ago has no similarity to what you're about to do or trying to do or in the middle of doing.
No.
And that is where you need someone with a little more foresight, the ability to really sit down, spend more time and listen. And that's where we come in. That's where a lot of like non-bank lenders come in.
It's interesting. It's, the banks have only gotten bigger too, which is the opposite of what they wanted to try to achieve after 2008, 9, 10. But that's the irony of how the systems worked now. JP Morgan has just become bigger and bigger and bigger and bigger and bigger until now there's like just a handful of big banks that almost control everything, which works against the whole system in a way, but also creates your opportunity.
Correct.
It's like that's your entire opportunity. It's like, they just can't even service the stuff we do. And they couldn't even dream of providing the value we provide. Because I think that's what's interesting about what you're doing is you're not just providing capital, because in theory, anybody with capital can provide that capital. There's no real barrier to entry other than just having the capital, but you're also creating that value for it's a win-win proposition, which in some lending, I grew up around lending on real estate, but kind of distressed assets. And so the guy I was with, he wouldn't really care if they were successful or not in repayment, because he would only lend on properties that he understood the value of and would want to own himself. And these were commercial properties. And so he did really well when they paid him back, because it was a very high interest amount because they couldn't get the money from anywhere else. But then he also made probably more money when it didn't work. And he was able to then go realize the value of that asset and then sell it off. And I think that's in a lot of alternative lending worlds, that is kind of how it is. It's like, you need me more than I need you. So we're going to set this up in a way in which I'm the casino, the house always wins, and I don't really care if you win or lose. And sure, I mean, hopefully it works out for you, but if it doesn't, it just is what it is. That's part of my business too. Whereas in your business, it's quite interesting because it really is a win-win. You want them to win because then you win.
Right. But it also has to be a win-win-win because we look these evolutions of what we learned. We can win, yes.
Uh-huh.
The subcontractor can win, yes. But the general contractor needs to win,
and the
project needs to win.
Yeah.
So the way that we structured our program and loans by the third, fourth iteration was based on that premise. Because everybody else in the alternative financing world that tries to enter into construction enters with their models that they work with in other arenas, and it doesn't really work that way. And that is, what's the highest credit in the capital? What flow, right? Like if you and I are selling something to Home Depot and we're not credit worthy, but we have an invoice from Home Depot, we could sell that invoice for relatively little interest because Home Depot is a very credit worthy payer. And if we have $100,000 owed to us from Home Depot and Home Depot says, yes, we owe it to Aaron, I can give you money for that invoice and Home Depot will pay me. No problem. It's not that way in construction because we're working on performance. Yes, there's very credit-worthy general contractors and there's very credit-worthy owners, but you can't sell an invoice really in construction because you have set-off clauses, you have performance issues, there's things coming out of the ground. It's not like I delivered the 10 widgets that you bought. So what we learned is if you enter into that world and just try to go up the credit chain and just leverage the next person, you're not helping anything, actually. It makes it worse and it's painful. Nobody wants to be leveraged. And so that, especially in an environment with construction where everyone's already trying to leverage each other anyway, if a lender gets involved leveraging someone, now it's just ugly. But if we're going to help somebody on the subcontractor level execute a project, that's good for the general contractor. If we're not going to force the general contractor to do anything outside of their contract, other than when someone performs and they agree to pay, they're going to pay them, but just into a project account. That's good for the general contractor, no loss. They can still set the contractor off if they do bad work or whatever.
Yeah.
And then that allows them to do better work because the sub with money can always do better work than a sub without money. And then, of course, as the whole project gets done, that makes it easier for the project owner. So when everybody's in a situation where the performance matters the most, then the project is going to be the best and then everybody wins.
That's really nice theory.
Right. But that's how it has to at least be between the sub and the general contractor.
Sure.
If I'm financing the concrete and masonry sub, I can help you make sure your concrete masonry scope is going to go really well. And I can make sure that they do well and that helps the GC. Now, if your electrician or plumber are running around there doing a whole bunch of stuff and it hurts the project, I can't really help that.
Yeah.
But I can definitely make sure it's a win-win-win for those three that are basically party to the scenario.
Yeah, and so the project owner and the general contractor then plays a significant role in your decision making because this is what drives me. This is largely why I don't wander into the general contractor world. I like self-perform because they have skin in the game. And I think that makes a huge difference with the mentality of the business, how the business is run, how they approach people, what their policies and procedures are, how their safety program looks. I think that plays a huge role. A lot of GCs now don't perform anything. They just show up with their paperwork and tell everybody what to do and take their margin. They win.
Yep.
But then they put in these, paid when paid clauses, for example. That's one of the ones I just love. I love it because I hate it. It's stupid because it's like, oh yeah, I'm Mr. $1 billion GC. If we don't get paid, we have a little bit more cash so we can float this or do this or that. But then these subcontractors, a lot of times, they're small. They're small companies.
Yeah.
And so it's like, oh yeah, we're all in this together. But you've got a lot more flexibility than we do. So Pay when paid. Okay, general contractor, you didn't get paid, but I have to make payroll this week. So I'm just sitting here until you figure it out, and you don't really feel all that much pressure to figure it out. It's like, wait a minute. And I know there's great general contractors out there that will also, even if they're not paid, will go to great lengths to then pay their subcontractors and cover their subcontractors because they know those relationships are important. But there's also a lot of GCs out there that just don't care.
They don't. And they don't have to.
Because they don't have to. Yeah.
It really depends. It's GCs are an easy target for all the reasons you just mentioned.
And I get they're working with an integrator system that has incentivized to do that.
Yeah, and we don't finance GCs either, by the way. We only finance really subcontractors. For all the reasons you just mentioned, the GC doesn't need the financing. But they do. Their general contractors have bank lines of credit. Who do the banks want to finance? They'll finance GCs, but they're not really going to finance construction contractors, subs. Well, in the nature of a general contractor, they do have risk. They have performance risk against the whole, let's say a project's $50 million. They are accountable to the $50 million project. And depending on how they've engaged with the owner, they might be a lot more accountable. Maybe they had to put up bonds, which if you have to get a bond, sure, the bond protects them. But they're signing on personally for that bond. They could really get damaged in some ways. Other times they're not. The GC that you have to be careful of, in my opinion, and who we look for are the self-performing GC. They might be a smaller size, typically, or regional. Sometimes they're larger, but they're not well financed, and they're using the subcontractors to finance the scope of work on the job they are self-performing. It's the GC that does their own concrete work, or the GC that does their own drywall, or the GC that does their own demo, or maybe they do. There's different parts that they like to do and don't sometimes, and that are easy. And sometimes they're very efficient, but if you have a $2 million scope that you're performing yourself, you have to finance that yourself. If we ran a cash flow on it, you might need $500,000 to do that.
Sure.
If you don't have financing yourself to run that, it could be pretty easy to use the other $15 million worth of trades that you've subcontracted an extra 15, 20 days to kind of get yourself moving along. Those are the things that can give the real people bad names sometimes.
I see.
So those are the things you have to be careful of when you're just working with any particular GC. Now, to your point, the construction manager, who might be a general contractor also, but they're really acting as a construction manager, meaning we're managing everything, but we're getting paid a fee of some percent as you're paid, and therefore we're paying a rate. That's a different engagement than a real true general contractor with skin on the game, project manager, cost that's going out, maybe labor, but it's not a lot, but they have some costs or risk associated to non-performance. But you could have 15 different engagements in those chains that we just talked about. So knowing that when you go in as a subcontractor is really important. That's also part of the value we provide, knowing those. Because why do we care? Because if we're truly aligned to the subcontractor, we know the cash flow and we can help them provide the cash flow and they can execute and perform, and then they just need to get paid. Any break in that cycle, for all the reasons we just mentioned, could cause them pain, which causes us pain. If it's good for us, it's good for them. If it's bad for us, it's probably bad for the sub, or it adds more risk. And I think a lot of times it's just make sure you go into the project eyes wide open. Know that you need $600,000 before you're cash flow positive. Don't go into it thinking it's 200 and find out it's 6. Know that you're working for a GC that is also doing the concrete and the drywall or framing, right? Why? Well, because they might need cash. So know that the project owner is already financed before you start work.
Sure.
In the dirt world, a lot of people are going out on these sites right now, starting to clear land long before the bank total financing is done. So think about any project that's going on. The earthwork is the first stuff out.
Yeah.
The first money out on a job is the equity from the project owner. Of course, we're talking about private projects here, right? Yep. Is the equity going out first. That's the cash that the owner of the project had to put in before their bank financing kicks in. So they'll spend a lot of that cash and get that going before the bank line's even closed. Well, why does that matter? Well, in this last 2-year environment, a lot of banks pulled their loans, I've proved that, but it's not closed yet. It's not committed yet.
Yeah.
And all of a sudden you have $1.5 million worth of work in the ground, on the ground as a site contractor without a bank financing. And all of a sudden there's no bank financing, which means the project becomes unviable. The owner may not be so inclined to just burn up their equity paying you.
Yeah. And even if the owner, they have to pay you, there's a lot of stuff you can do with like lawyers, for example, to just,
drag it.
We're just going to drag it. I mean, and I don't know, we have more lawyers than you do. And so we're just going to out-lawyer you and just going to make this.
Yep.
Yeah. And for a land clearing contractor, it's like, even if you're in the right, that doesn't make it right from a cash flow standpoint.
Right. And so I saw a land clearing contractor. This just happened last month. It's like, look, the bank financing isn't closed yet. That doesn't mean it's bad.
Mm-hmm.
It just means it's not closed yet.
Yeah.
So
there's some exposure here.
Yeah, you have some risk here. Do you still want to move forward? Yeah, I know this client. They actually, matter of fact, they do have the bank financing. I actually spoke to the bank. The bank is going to close it. It's committed, but not closed.
Mm-hmm.
Okay. Well, how did we know it wasn't closed? Because I promise you, when a bank closes a loan, they put a lien and security position on the dirt.
Sure.
So it's very easy to find out.
Sure.
Right? So when a subcontractor were to say, "Oh no, I talked to them. I talked to the bank. I know everybody." And by the way, I worked on this project with them 4 different times. Like we got a great relationship.
Mm-hmm.
Great. If they're like, "No, actually, you know what? We're from out of town.
Mm-hmm.
We're doing work down here in Georgia, but we're from Maryland because there's a lot more work down here. I've never worked for this GC before.
Mm-hmm.
I didn't know they didn't have bank financing. I just got a notice to proceed."
Sure.
Totally different risk profile. Like it doesn't mean don't do the work. It just means like, just know you're in a different risk profile.
Mm-hmm.
And then my position is, are you charging for that risk? Mm-hmm. Just because you get you've pointed this out, maybe you didn't say it this clearly, but just because you have a contract, just because you have a notice to proceed does not mean you are guaranteed to get paid.
Sure.
And so you just want to know what risks you're taking. You know what I mean? If you're in your business, if you're going to go across town to get on a site and do what you do, it's a little different than if you go to, Saudi Arabia.
Yeah, definitely.
Different risk profile, right?
Yes. Yeah.
Different cost structure.
Yeah.
Doesn't mean you shouldn't do it, but what's 5 days out of your work life than half a day driving across town? You might be taking the same pictures for the same amount of time, but there's just different pieces. That's the same analogy.
Yep. Yeah. No, understood there. Yeah. And I was reading the AGC report yesterday on the podcast. And it's quite interesting because I think over the past 4 years, 5 years especially, there's just been a lot of uncertainty. And I think interest rates have played a huge role in what's happened to some projects over the past few years, I think, because, a project that was viable at 4% is no longer viable at 7%. And it's like, oh, it's just 3%. And so if it was viable at 4, it must be viable at 7. Like I can, still afford that mortgage. But it's like, no. If you work that out over the lifetime project, that's a wildly different perspective. And so a lot of projects were put on hold for that reason. And then a lot of projects have been put on hold, both public and private, because of just material costs. And materials are up 30-40%. Concrete, aggregate, pipe, everything, equipment, everything, 30-40% at least, which is crazy.
That's before you factor in the cost of the delay.
Yes. And so, and a lot of, I know when contractors are, and you probably saw this more than anybody, when everybody's getting squeezed really bad, like 2022, 2023, some companies and owners were buying materials for like the next year. Like, cool, we're just going to buy all the pipe right now because we can. But that's a lot of money to go put out that you normally wouldn't put out just for the sake of security of having those materials, because the cost of buying it all now is potentially less than the cost of the delay if you can't get the materials future state. And that was the game everybody was playing, and no one knew what to do about it.
Or when it end.
And when it would end. And I think the costs have somewhat stabilized right now, but that pressure is still there, and everything is still 30-40% more.
It's true.
It's crazy.
And it's like airplane seats. they're not going to come down. They're not going to, because
No.
they're not going to remove the seat fee or the baggage check fee. And so if you can increase your margins by way of price increases, that's one thing. But once you have the world accustomed to a certain price, when the prices come down, you're not necessarily bringing your prices down. You need supply and demand and competition to kind of do that, the market to drive that. But you're right. There's a lot of, like, we knew steel contractors that were buying barges or committing to like options on barges of rolled form steel, right? If you're making studs, you pricing of studs go up, you can blow a project out of the water with, if you're in that scope of work, very easily if your pricing on studs is too high, right? Where it really shows up the interest rate impact for the contractors that are working on like single tenant projects. So think of like the bank that's going at the front of a parking lot on Main Street, the McDonald's, the Burger King, the Chick-fil-A's, the 7-Elevens, the Wawas, the gas stations, those folks that are building a lot of those, that also the trades that are working on those are all built by not 7-Eleven necessarily or the bank. They're hired by a developer, could be just like Scott and Aaron. We create a single entity LLC. We have a relationship with a bank. We put up our equity. And if our rates go from 4% to 7%, our costs over the course of what could be 18 to 24 months on that money is doubled.
Wow.
And so even though 3 little percentage points doesn't seem like a lot, when you double our cost of carry, let's just speak in development speak, that becomes not worth the risk for us. And so now those projects aren't coming out of the ground. Or that requires us to have to go to our tenant, a 7-Eleven or a Chick-fil-A, and increase their future rent by who knows what. Could be tens and tens of thousands of dollars, right? Or a 25% rent increase. Well, how do you think that conversation is? Right? That's more difficult. Couple that with our budget at the same time, not only our cost to carry, which is just a direct impact to profit. Now our cost to carry is higher, but also the material costs are higher. So now our general contractors that we're hiring are coming back with prices that are 30% higher.
Sure.
Well, we're just not going to build.
Yeah. And I've seen that true for both public and private. Public too. Public, because they only have so many dollars allocated. Hey, this project came in 30% over engineer estimate. Like, we're just going to wait. Or like, we don't have the money right now. Or we're going to steal money from this project and we need to build this. So cool, we'll choke down the 30%. But now this project doesn't go anymore. And I'm seeing that a lot just because of these rates. And it's kind of scary too, because it's like, on one hand, you want the industry to do well. But on the other hand, a lot of these material providers, they're public companies. And public companies are built on the next quarter and are built on more the next quarter and more and more and more and more. And they're all reporting record earnings. They're hiking their dividend. Oh yeah, life's good for our shareholders. But that never comes back. You never claw that back. And so, I'm not like accusing any one individual, but this is just how this corporate system works is, there has been serious, significant inflation, like diesel fuel, for example. It's like, just is what it is. But then there's also been, there's an opportunity here to kind of move in this direction even further because everybody's just used to it. So let's just keep it going. And then once it's there, it never comes back. It never comes back down.
But the way that so let's talk about like a solution to that. Like, how can a subcontractor, contractor in any world help this scenario? Don't compete with each other on price to the bottom. Like, there's other factors in business that matter. And by the way, if you had a secret poll and you asked every general contractor, what do they care about the most? They're going to tell you they care about the performance of the project the most. That's what they care about.
Yeah.
Then it's going to be doing it for the best price, but not at the cost of performing the project. Because what I was mentioning to you earlier, they do have a ton of risk in that project. If that doesn't perform, that's where they get killed. And finishing a job is hard, especially when you're managing a lot of trades. So don't don't think your only and best value proposition is price. Go into it with like, my best value proposition is performance. The mentality I have is, you'd be crazy not to hire me on this job because I'm the best to do this job. In order for me to be able to perform this job, I have to make money and do it well. And whether you are competing with someone who you think can do it for less and you think their margins are less, they might be doing it for less and have much higher margins than you. They just have figured some things out. Maybe they're more efficient. Maybe they can overlay their cost structure different. Maybe they don't need debt. Maybe they're a second generation and their whole business is able to be financed on cash. I mean, there's a million different reasons why but just because someone can do it for one price doesn't mean that they're doing it for less margin.
Sure.
And so if you're in the game trying to make it work, like, figure out what margins you need to operate at and to do well, to perform well, no matter what they are. And then bid your work at that. And if you don't win any work, first bid more. And second, then you need to take a hard look at what your cost structures are, not your hard costs on the project, but maybe you have 5 family members in your office and you really only need 2.
Yeah.
And then stick to performance first. You'll appeal better and walk in with the attitude like, I'm going to crush this job for you. You'd be crazy not to do it with anyone else, because I promise you that's what the general contractors want to see. They want to see their job done.
Well, and even if it is strictly awarded on a dollar basis, I've still seen the contractors that are focused on performance do the best, because they can even, I've seen a lot of just world-class contractors at a specific type of work leave $1 million on the table and still make a ton of money.
That's right.
Because they're disciplined enough to focus. They've defined what projects they're really good at. They understand what their costs are. They're from an operations standpoint really, really lean and mean, and they just stay within those guardrails. And maybe they expand their business into another vertical, but they still define what those guardrails are, and they're disciplined enough to, even when they really, really need the next job, to stay within those guardrails. I think those are, and I'm thinking through just the best contractors I know in all different categories, all different revenue amounts, different geographies, different types of work, and all the best performing ones. They're disciplined, they know what they do well, and they stay within that, even if that's a lot of things. They haven't got there overnight.
That's right.
But yeah, they stick with what works for them, and they know
because they know if they turn down a $10 million contract without the right terms, that they'll actually never make the margin anyway.
Yeah.
And that's hard to feel, because you feel like, oh, I got this $10 million project. I know what my hard costs are. I'm going to for sure make this profit. Yeah. And the reality is, when you learn that you are not for sure going to make that profit until you actually finish the entire thing, and more importantly, you're paid all the money, the end of the revenue cycle, right? Go back to the beginning of what we talked about. The definition of end of revenue cycle is when the last penny's been paid to you.
Well, and going to workforce, one of the biggest, if not the biggest pressure right now that I think 2 years ago, if you would have asked contractors what the biggest pressure is, I think it would have been materials, because that was and diesel. That was just squeezing the hell out of everybody. Now that they've somewhat been able to reckon with that, workforce is front and center. Everybody, regardless of if the company shares financial information, everybody knows if a project's doing well or not. And projects that are losers suck to work on. They're just, they morale is terrible. Everybody's pissed off. Leadership is stressed out, and it just works its way down, because, who does know the financial performance then puts it down. Ownership puts it down on project management. Project management puts it down on superintendents, foreman on it. So it works all the way down, and it just sucks.
I got to eat it. You're eating it too.
Yes. Everybody knows, regardless of if they really know or not, that this project is a turd. It's a loser. This sucks. And you can I've been on projects that are winners and losers, black and white. But the projects that are winning, everybody's having a really good time. Everybody's, and which then feeds into itself. Now they're performing even better. Now they're making even more money, because they know that, yeah, this is a winner, and we're gonna we're going to knock it out of the park even more. And it is amazing just how the financial performance of a job impacts those people on the front lines actually performing the work, whether they know or not. They know.
I know. And see, like, talk about workforce is the key and the lifeblood. Attracting it, keeping it, fostering it, and improving it. Those are the most important things to a company, because without a workforce, you have nothing. Now, how do you get a great workforce? Well, you have to teach, train, educate, recruit, and help. It takes money to do that. And so you can't just focus on profit, because as we talked about before, cash flow is the most important. If you don't have you can have the most profitable on paper accrual counting books. Okay, great. The bottom line is you can look on profit. There's plenty of companies, and hopefully people are listening to this and probably smiling, but you can be really profitable, paying a lot of taxes, and be really in pain with no cash flow. So that's why cash flow is so important. So if you focus on cash flow in your bidding process, you can put an appropriate bid in to know that you'll have the cash, which then allows you to have the most efficient work schedule, which means you have the most efficient ability to get your folks on the job when they can be the most efficient, which means they can win, which means they're going to be happier, which means they're going to take advantage of all the things you just mentioned, which is then going to bleed over to the next trade that's watching them. Because newsflash, this trade finishes and it gives them a great work product. The next trade comes in and picks up a great work product. It's going to feel great for them to finish, hand it off to the next trade and the next trade, and so forth. And so that positivity is why it becomes great on a project or bad on a project. It's also why you can feel it. And it doesn't necessarily mean the whole project is bad. It might be one particular contractor at the wrong spot could have got the party started, and then it just trickles from there. And focusing on cash flow so that you can execute in the way you are able to. And everybody has to make that decision in your own business. You can't emulate someone else when you're not where someone else is. Then you're allowed to take that money, that profit, pour it into your employees. That recruits and maintains the people. They're able to do even better work the next time. They become more efficient. If you're bringing in a new workforce every 2 years, you're not going to gain any efficiency. So you have to create leadership, structures, experience, and you need money to do that, which is why I always say you can't race to the bottom. Now, in public work, rip and bid, sure, it's going to be low price wins. Then don't bid those jobs until you know you can do the rip and bid price, whatever that is, at the margin you need.
Yeah, and again, I've seen a lot of 100% public work contractors make a ton of money, and so I know it's more than possible. From $10 million a year contractor to $1 billion a year contractor. And you do make less and less money on average as you get bigger and bigger. But I've seen contractors perform extraordinarily well in the $1 billion public arena and invest a ton in their people. And it's funny, I think it was a study with maybe Harvard Business Review or some it was pretty big time study, and actually quite an old study about employee satisfaction. Employee satisfaction is best when the company's performing best financially. It's tied directly to company performance. Because again, if the company's losing, everybody wants to be part of a winning team. It's a lot more fun to win than it is to lose.
Nobody wants to lose.
No. And even if a company is completely closed off financially, the books have been sealed shut, the padlock on them, which a lot of construction companies operate that way. People know if it's a winning or losing company. They know.
You can feel it, you see it. It comes out not just in raises, it just comes out all over the place. And so, and by the way, for the leaders, it's a lot easier to lead when you have money to be able to help do things that you need to do.
It's so much better. Yeah, I mean, we've been so constrained from a financial standpoint for 2 years now. And we're not. We keep telling everybody hey, we're hitting our goals right now. That doesn't mean anything changes. Because this can get away from you so fast.
So fast.
And but everything is just substantially better because we don't have to worry about where money's coming from for next payroll right now. And it's so nice because then we can actually, because I think what happens is you're just in survival mode. And if you're in survival mode, this is the irony that is, there's a mine I visited last year. It's a thermal coal operation, 10 to 15 million tons of thermal coal per year in Australia. and thermal coals for power. So it's shipped on by rail up to the port, from the port to India. The environmentalists hate them because it's a coal mine for power production. But their argument is, listen, if somebody doesn't have consistent power, you've always had power in your life. So you don't know what this is like, Mr. Whoever you are in some industrialized nation like Australia or the United States. If somebody doesn't have power, they don't think about anything else. Nothing. Or if you're starving, you don't think, there's no future. All that matters is your next meal, and you will do anything to just live. And so their argument is, if we can get people consistent power, then for the first time ever, they can start to think about other things, like how do we live a little bit more responsibly, and how do we care for the environment a little bit more. And so the more I think about it, the more I think, yeah, this probably is true. If you help people industrialize, they actually become much more environmentally conscious. And that's the only reason why we can be so environmentally conscious, is because I can go into any grocery store right now and get as many calories as I need for months. I don't have to worry about it, which is crazy. And it's the same thing with business. If you're just in survival mode, you don't care about training. You don't care about this, about next year. You just care about this week, next week. That's it. And when you're operating perpetually in that short-term world, things suffer. You suffer, your people suffer, your work suffers, everything suffers. And I get that's a reality of business. There are seasons, but if that's like the model, it just won't succeed.
Yeah, it can't be your perpetual. That season can't be lasting forever. You got to be learning something and figuring out, making adjustments, figure out why you're there. Sometimes you're just there because that's the doorway to the next phase. Like it's almost sometimes it's because
which is where we were. Yeah.
It's congratulations, you've done great.
Yeah.
Welcome to the new world.
Yeah.
This is what it looks like at the beginning of the next phase. Sometimes you've poured yourself into that spot. And we're like, man, what you just said, I understand so wholeheartedly. It's like one of the greatest perspectives is, God's going to give you the tools you need to get to the next spot. Okay. But sometimes you need the tool, but you might not like how you're going to get it.
Sure.
And so like that doorway you just described is kind of what you need to know. And so if you want a bunch of people to learn to be in India thinking about other things, like get them some power, man, because right now they're in a different phase than you are. Or you give up all you have, go there and try to live in the environment that they're in, and then think.
Then let's talk.
Let's talk. Yeah. Then let's okay, where should we start? Okay. Yeah. You know what? Bring some power in, man. We're all hungry and we can't see, so we can't even have a conversation, and no one can shower, it's simple. So I think you're hitting the nail on the head, but there's a lot of relatable facts to that, to business too. You don't know what you don't know until you have to deal with it.
Yeah. Yeah. And going back to construction, I think one of the biggest problems is it's just a hyper competitive market, and it does incentivize a race to the bottom, and it is hardest to be small. I think as you get bigger, it doesn't get quote unquote easier, but it does in a way. I think the bigger companies have a lot more flexibility than the smaller companies, because it really just is. It's so much that just the competition is just so much more fierce at the bottom when anybody can go get a contractor's license and become a contractor tomorrow.
But if everyone that gets a contractor's license goes out and bids on price as their leading indicator, then guess what? You're going to have a price problem.
Yep.
But if you go out as an awesome contractor and you're like, okay, for the first year, I need to do 3 or 4 projects that I can do by myself with my 1 or 2 laborers, and I'm going to figure out what I don't know and learn it. One, I'm not going to try to play an immediate game. I'm going to play a 5-year game or a 10-year game. And in year 1, I have to learn how to win and execute projects to completion. I'm just going to get those reps. And then year 2, I'm going to do that a little bit bigger. Maybe I'm going to do 2 projects at a time. Maybe I'm going to do 3. Maybe I'm going to figure out what it's like to bid. And all of a sudden you'll start to see where these business, like in Utah this, but they vibrate differently at different levels, different problems. 5 employees. All of a sudden You're not the person on the job anymore. Someone else is. Different vibration.
Sure.
Project at $1 million is different vibration than one at 50.
Yeah.
One that you can complete in 2 pay apps is different than one you have to complete in 6. You can't just go out and try to get $1.5 million job when you're not supposed to do $1.5 million job, because then you're bidding it. You don't know how to bid it, and you bring a price down for everyone.
Yeah, you screw the whole market.
You're not entitled to be there yet.
It's a different skill set. And I think I see a lot of people struggle with this too. Building a job is a completely different skill set than managing a job. The life cycle, managing the money through a job is different than building it.
Totally different.
And there's a lot of people that I think most people that start construction companies are good at building work. But there's the operations of the business is a completely different skill set.
Mm-hmm.
And the companies that I've seen have done the best is either with I'm going to just call them a builder that goes out and deliberately gets the skill set needed to be a very good operator, or a builder that finds a very good operator, or an operator that trusts a very good builder. And I'm making it very simple. There's a lot more complex structures here, but I think you need both to be really, really successful. And very, very rarely have I seen it be the same person. Typically, and I'm thinking through the examples in my head, the best examples have both sides of the equation. They have really good builders, and they also have really good operators, because they know those are 2 different skill sets, and they're smart enough to acknowledge, hey, I am a builder and I'm going to do that really well. And I'm going to trust people to be the right operators, or and that's, I think I've started to enjoy my work a lot better, just understanding what my skill sets are and understanding that I'm a big picture guy. I'm not a day-to-day operations mind. That's just not how I work. I don't understand the details. I don't know. I understand cash flow, big picture, but I don't really understand the ins and outs of a P&L. Like that's just not how. And I can read a P&L and understand it now, but it's like that's not what gets me going. But you put a P&L in front of Randy, and it's like, he can tell you in 5 minutes, oh, here's exactly what's going on, XYZ, not a problem here. It's like, how do you do that? But we've started to finally get our business in a way that's like we're all aligned in what we're good at, and we're all in our lanes, and we're supporting each other here and there, but we all know where we should be. And I think construction companies, the best ones, they have that same model too. And it works out really well when it works out.
What you just summarized is really 2 great books. The E-Myth by Michael Gerber.
I haven't read that one.
All right.
No.
And Good to Great.
That one for sure.
And Jim Gahn. So the first part, the E-Myth, and they actually make an E-Myth for contractors. It's really simple, easy book. You could read the E-Myth Revisited, which is fantastic, but it talks about Sarah, the baker, who owns a bake shop. Mm-hmm. But there's an E-Myth for contractors that's like a third of it, and it's very specific. But basically what it describes is there's 3 things you need for any business. It's the entrepreneur, the big thinker, the one that's, I see that problem, I want to tackle it, let's fix it. Then you need the operator, the manager that actually can put pieces together. That's where the finance component fits in. That's the people, that's the execution. That's how we're going to take care of the back office. And then there's the technician, which is what you just described. And in construction, that technician, and so one person is rarely, if ever, all 3.
Yeah.
Some people are always one with probably a little bit leniency to maybe the second 2. And so if you take construction, why is it such an issue? Well, most construction folks are technicians. Mm-hmm. They got into the business because they worked for somebody that was terrible, and all of a sudden they had to go out on their own, right? Or they were motivated enough and they went out on their own after working with someone really good.
Sure.
But it's the operator tech. So they had the E, the entrepreneurial spirit. They had the technician, but they're missing the operator. And as you grow a certain size quickly, that operator becomes very critical. And if you don't have that component, which just by nature, construction does not, it's not something that you do, it starts to really show its head. And that's where these stigmas in construction come in, where construction contractors are terrible with money. Blah, blah, blah. Well, they're not really terrible with money. It's like if you had a bunch of finance people that got into construction, you'd say these finance people are terrible at construction.
Sure.
Which would also be true.
Yeah.
The problem is when you are a technician in a business, you don't get to avoid the finance and operations. It's just part of the game. And so once you understand that, to your point, you realize you got to get people to support. You need those three components, and that's where you hire for that level. Good news is it's really hard to hire someone that's an entrepreneurial spirit and a technician. You can't hire for that, but you can hire managers and operators, and they can learn their business. They understand the inflows and outflows of humans and money. And so the second piece where you talked about is once you have those people, good to great is getting the right people on your bus. Yeah. And then more importantly, getting those people in the right seat on the bus. Yeah. You do those two things, now you're ready to scale. And that's what we were talking about a minute ago. When you can get a business and start a business, this is what you learn doing the projects you're supposed to be doing. Take a 5-year approach to it. Don't try to be where you're supposed to be 5 years from now in 6 months. You know what I mean? Like learn these pieces, learn these tools, read these 2 books, and you're going to be 3/4 of the way there, by the way. So not knowing is part of the battle. And now that you know the information, you can execute on it. It's kind of like what we talked about with the cash flow tool. Cash flow tool shows you where the project's problems from a cash perspective are going to be under the plan you're trying to execute with the bid that you put together. Wow, that's powerful. Okay, so week 10, I'm going to have a big cash flow gap. Okay, well, I can execute to that now. I know what I need to do. I can switch and tweak this or that. But if all you're thinking about is, how do I get the lowest possible material cost? But you're not thinking like, ooh, maybe it's better for me to pay 5% on that material as that supplier doesn't require a deposit and will allow me to pay them in 60 days instead of 30 days with a deposit, even though I'm saving 5%. You're better off paying an extra 5% because that's worth it for those terms. And you only know that if you know how the money flows. And so that's why those two things are critical. And I think your points there you made are awesome. And they're, like I said, you summarized those 2 books.
And all of this sounds black and white. And in a way it is black and white. It's finance. But I've also learned in business that people are wildly irrational when it comes to dollars. And there's egos and emotions. How often do you run into ego, emotion, things like that?
Oh, every day. Every day. I mean, so
because I can say, I know how to build this job. Who are you? You're a finance guy. Yep. I know how to build this job better than you do. I've been doing this for 30 years.
And I tell them, you're 100% right. and I'm just showing you how this job's going to cash flow under the ways you want to build it. And they'll say, okay, I get it. And more often than not, people will get it because we're providing that whole cash flow tool long before there's a loan or anyone's paying us money. That was a big shift. When we just tried to like make loans, that was more of a tenuous situation because we wouldn't figure it out till the same time they were figuring it out, which is when everybody's already out in the middle of the project. You don't have any options. When you're giving people information proactively, those conversations still happen. Yeah. They tend to happen around, why do I need a project account? Well, why can't I just have all the money? Why can't I just do it? Why don't you just give me all the money up front? Now I have this tool. I'll do it this way. And we're like, well, can't. Like, it doesn't work that way. I'm like, but think about it. We were able to create this tool, this loan tool that allows you to execute this work. And yeah, there's a couple pieces you might not like about it. Like, yeah, we're going to make sure the vendors are paid directly, right? Because that's good for you. I mean, that's what you want to do anyway. So who cares if the money comes from an account with your name on it that they don't know that you have a loan? Sure. But we know they're paid. That's just good. We're giving you the ability to go out there and execute this work. I'm not going to tell you how to go build the building. Yeah. But in the same token, I'd like it if you just let me pay the vendor that you want to pay anyway. When you tell me you want to pay them, I'm not going to pay them all up front and any of that. We'll pay them whenever it's due and you submit a disbursement for it. On the flip side, we know this project works. When you're paid on the project, it also comes into this project account. So let's make sure the money comes into the project account. Mm-hmm. Well, I don't want to do that. I'm afraid my customer might know. I'm like, well, we're not asking your customer to do anything. We're not trying to like send them notices, or we don't do that. But we do want to make sure that money comes in that account. So we use, we use different tools. And like people are paid through different systems, whether GC Pay or Textura, or sometimes they just mail the check. So instead of mailing to their office, they mail it to our office. No big deal. Still made out to them. But the reason that pride and ego comes in, and once someone goes on a job and pays payroll every week with no stress, buys material with no stress, finishes it with no stress, does the job efficiently with no stress because there's no cash stress, they're like, okay, like, let me do that again. Like, how do I do that again? You know,
because then they can just build.
Yeah. And now they're like, okay, well, you just taught our whole back office how to cash flow this project, this tool. So now we're filling out cash flow tools for at the bidding phase. They're not even close to starting yet. They're like, what does this look like? Okay, I need to make some adjustments. This margin needs to be here on this because of this. And that's the cool part. So when you're on your 15th, 16th, 30th loan with someone over the course of 2-3 years, and you've watched them grow from a $2 million business to 10 or $5 to $30 million business, or even $25 million business to 50, and someone would say, $25 million business, why can't they go to the bank? Well, you're a $25 million business and you're taking on $5-6 million projects now, and you might be doing, 10 of those a year, or on your way to doing 10. That scares the crap out of the bank. You're going to the bank with a loan that, or asking for money that might be millions of dollars, higher risk to the bank, to do project related work that's like performance based, that's not guaranteed. Also scary, but not scary to us. They're a more healthy business. They can help grow. So it's really growth. So like people always ask, where's your sweet spot? Our sweet spot's really someone who knows what they're doing. They've been in business a few years. Whether it's a couple $1 million business trying to grow to another couple million, or a 5 to 10 or 10 to 15 or 15 to 20, they all are great for us. Just different levels. They need different money and different skill sets.
Sure. I guess before this, like I had a vague understanding of what you did, but this has been extremely helpful. It makes perfect sense. And this is what we've realized. Like, last year at last year's Area Dirt World Summit, you were there, right? Yeah, you were there. Bob Chapman comes up to talk, and this guy has 15,000 employees, something like that. I mean, it's a serious operation. What he's done over 100 acquisitions very successfully, which is extremely rare in business.
And integrated them.
And integrated them and is wildly profitable. It's all private company. It's incredible. He doesn't get up and talk about, you need to give everybody hugs, so on and so forth. He gets up and says, you need to make sure your business is a great business. You need to make money because that's the only way this works. and it's like, well, if he's saying it, it's probably true because he has a track record to prove that. And that's why I like guys like him, because it's like, he's not a theorist. He's not a professor. Yeah, I've studied this. It's no. This is what I've done. And I'm not saying it'd be perfect for you, but it's worked out pretty well for me. All he talks about is you got to make your business work, and it has to be profitable, because that profit is what gets you the investment in your workforce you need to then get more profit to grow your business. That's it. That's the game. And so we have then asked ourselves, who do we need to be talking to? People like you, to help contractors become more profitable. Because if they are more profitable, now we can train people better. Now we can pay people better. If you ask people why, and I have over 10,000, why have you left a company in the past? Pay is by far the number one answer. Noted. Cool. Pay. So you can be doing all the right things. And especially here, if I don't pay someone what they need to pay their mortgage, send their kids to school, to have a vacation, whatever it is, to have the lifestyle they want, they're gone. It doesn't matter. We just had someone leave the other day. He loves it here, but he got offered a better opportunity. That's way better for him. And I'm like, I can't compete with that. Good for you. I'm so happy. It's a bummer for us, but great for him. A lot of it is financial motivation. It's like, yeah, I get it. I would do the exact same thing if I were you too. And he loves it here, but that's only part of the equation.
It's only part of coffee, free coffee and snacks, and a ping pong table is not going to make it happen.
No one cares.
It's cool.
Yeah.
If all the rest of it works.
Yep.
And like, we used to have this phrase, like, they're like, do you have a best friend at work? Like, yes, you want to have friends at work, as long as they're filling their primary role first, which is like, if you're their boss, like you're a great boss, you're providing them a great environment. They're going home every day and they can tell their family that like, this is great. We're good. They got us there. Like they're doing it. And then if you happen to be cool and friends too, that's awesome. Yeah. But you can't be friends and not fill the other requirement.
Well, that's why I don't like the whole "we're family here" thing, because that's not how it works. No business works on that. And I think it's said with the right intention. Mm-hmm. But me, if I heard that, it's a lie and I know it. And I don't believe it. It's a conditional relationship. So me,
by definition, family is not.
Family's not conditional for the most part. But for me as a business owner, you individual, you need to do your role well. You need to perform. If you continue performing, I will continue paying you. And you will only continue performing if I continue paying you. If I say, I don't want to pay you anymore, I can't pay you, you're gone.
Right.
You're gone. Right. You don't care about the company. Right. You don't care about the mission. You've got a family to feed.
That's right.
It's purely conditional, and you have to meet those conditions. There are other things there. But I think that's where the culture conversation is being misconstrued. It's like, no. It's about performance and about money first, and then the other stuff. But you got to make sure those fundamentals are dialed in, or else none of the other stuff matters.
Yeah, I think it's like a requirement. You know, if you're gonna learn to walk, then run, and you're trying to be a world-class sprinter, like, okay, we're all going to talk about what it takes to become a world-class sprinter, but we're assuming you have legs.
Yeah.
Right. So if the conversation is, if we're going to be awesome, we're going to be a family, we're going to create this mission, well, we're all assuming I'm going to get paid well too, fairly, and fairly. Okay, great. So when those conversations about, yes, we're a family come up and we have this vision and this culture, it's not the absence of, I'm going to be, because you can pay me unfairly or not pay me. It's that box is checked first, and then we move through the rest. And I think that's something that good leaders pay attention to, mindful of, and don't try to test.
Yeah. Yeah. And
like you said, don't be upset if someone leaves because they have double the money. That's a huge impact to their family. Like, you can't be upset with that.
Huge.
Doesn't mean they don't care. Doesn't mean they don't care about the mission. And it also doesn't mean they can't help you where they are.
Yeah.
They can. It's like, you know, I've got a mentor that's reminded me many times that says, you know, like, when people leave, but they love you still, like, isn't it good to have people outside your organization that love you, want to help you?
Yeah.
Yeah, it is.
Yeah. No, and I think we've learned the value of that, especially the past few years. I'm hard-headed. I'm young. I'm still in my 20s. I'm an idiot. But now we're starting, like, thanks to people like Jason, Dan, Randy, Kara, others of the business, it's like, we're so much better off just bringing people in. So I appreciate you coming down. How can people find you? They want to learn more? Or?
Find us at mobilizationfunding.com. We've got a great YouTube channel with tons of information. All this little tidbits of information I've talked about here is all on our YouTube channel. You can get any piece of information, webinars on how to use the cash flow tool. You can go to the cash flow tool right on our website off the resources page, download an Excel version if you like that. If not, we've learned that contractors aren't always super savvy with Excel. So we've created a model that you can just tab through and answer the questions right on the website. And then we create the spreadsheet and it just emails to you.
Wow.
We don't market that. We don't call you. We're not dialing you for dollars. No one's going to call you the next day. We don't even ask you for your phone number. It's just your email. So create a new one if you don't want anyone to even bother you. But all of those tools and things are free. We have a podcast called The Construction MFers. Lots of cool guests, great information, people coming on there, people that are going to be at the Dirt World this year.
Sure.
Also, you want to learn about how to get back great amounts of insurance from premiums. And there's a great insurance folks on there. There's folks on government contracting, lawyers to tell you about the 4, 5, 6 things you can negotiate in your contract and how to do it. I just try to pour as much information, education out there. And then, of course, there's lots of stuff about us in and around that too.
Sure.
Yeah.
Isn't there a book as well?
I do have a book called The Big Book of Cash Flow.
Yeah.
Yep. You can get that on Amazon or you can get it direct through our website, a link to the publisher.
Nice.
It's called Big Book of Cash Flow. And it is a great little tutorial, 90 pages with pictures on basically all the questions you'd want to ask, but you might feel stupid. And just this simple, most basic, get up to speed on reading a balance sheet, reading an income statement. What is cash flow? What does it mean? Why does it even matter? Like, it's great.
And I think it's also advantageous for anybody at a business who is ambitious to understand, whether you have direct influence on it or not. Like, I think it's pretty easy to sit here and look at this conversation like, oh, this only matters if I'm a business owner. This only matters if I'm a chief financial officer, whatever it is. But I think it technically, it does matter for everybody, because even me as a laborer, an operator, a foreman, a young engineer, whoever I am in the picture, I still impact cash flow at the business in one way or another. And so if I think a lot of people, rightly so, they've been taken advantage of. They're abused, I think, by a lot of employers. There's a lot of bad employers out there. A lot of bad employers.
100%.
Tons terrible companies. There's a lot of great companies. But I think a lot of people have been abused their careers. And so then they get into this defensive mode. They put on their shell and I'm just gonna do my part, but I'm wary of this company. But I think the better opportunity is to still, no matter where you are, ask yourself, how can I make this company better? How can I make this company more money? Because if I do that, I am gonna get squared away. Either if I'm at a great company, they're gonna make sure that I'm taken care of financially, or when the market turns, I'm not on the chopping block because I am invaluable to this business. And then if the company sucks, cool. You just have greater market value and you can hopefully find a company that doesn't suck. But it's just not a losing proposition. I feel like if you really ask yourself, all right, how do I make this company more money? I would not be upset with anybody at this business helping us make more money.
Best ideas are always going to come from the people closest to the business.
Yeah.
And I think the best mindset an employee can have is, all right, I might have been used and abused and beaten somewhere else, but that doesn't mean that's how it has to be. And it's certainly not how everyone else is.
Yeah.
So how you see yourself is how you're probably going to make it happen. And I think if you can go do exactly what you just said, is open your mind, remove the kimono and say, hey, like, you know what? I want to be treated awesome. I'm going to go treat everybody awesome. I want to be at a profitable company. I want to make more money. I'm going to go show this company how to make more money the best possible way I can. I'm going to speak up. I'm going to contribute. I'm going to show initiative. I'm going to do all those things that are going to allow this company to be better. And guess what? When they are and they're better, I'll probably be in a decent position to take advantage of that. Yeah. Or if not, I'm going to learn all these skills and tools that I need to know what it looks like for the person that would appreciate these things. I'll know who they are because I'll see them and identify them, and they'll know who I am because I'll be identifiable. And that's the right way to think about it in my mind. And how you hear that phrase, like, how you want something to be, start being that way first.
Yeah.
You got to be it first.
Yeah.
If you want people to be kind to them first, even if they're not kind to you. It's kind of how the way it goes. The old golden rule. You don't get it and then, okay, cool, now I'll do it too.
Well, and even if somebody's super shitty to you and you're just kind back, do you leave that feeling bad? No, you're like, I got them. Like, they can't get to me.
Yeah.
You feel even better. And so I just, it's just a winning proposition if you approach things like that.
And if you meet a shitty person being shitty to you, you inherently just by nature realize, like, you clearly didn't make them shitty, therefore shitty to you, because you just met them. Yeah. Just with them. So like it wasn't your fault.
But your ego gets in the way. Like, wow, they have such a problem with me. It's like, no, there's nothing about you.
Right. So if you're in your own head, like running your own resume now, like, I'm this, I'm that, I'm awesome. They should be treating me with respect. Well, they don't know that either. So
and they don't care.
And you don't need to tell them. Yeah. Just be cool. Be like, hey, man, sorry you have a bad day. Is there anything I can do to help you? And they'll calm down. They'll be like, usually what happens, like 9 times out of 10, they're like, man, I'm sorry. I just freaking such and such happened or this happened. And then you have a chance at a real relationship.
When I see it, and you probably see it all the time too, like I was at the airport the other day and the plane comes in and it's already a little behind. So everybody's, a little on edge. And everybody's starting to line up. It's Southwest, so it's almost boarding time. Everybody's starting to get lined up. He's like, "No, don't line up right now. We have a mechanical issue," and you just hear, and they're trying to figure it out. Like it's not like they're stoked to be in this position either, and yet there's probably like then. As time goes by a little bit more, this is over like 30 minutes. It's not even that big. Just more people keep going up and he has to get over the loudspeaker and he's like, "Listen, I don't have an update for you. I just explained it all 20 minutes ago. Same situation right now, but you can just see people deteriorate so fast." And it's like, what does that achieve at all? Like I used to get stressed out too. And I used to, oh no, I'm going to get home later and I'm going to go to bed later and I have to get up early tomorrow. And then you just spiral so fast. But then you're like, what does that achieve? Nothing. But some of these people have so little adversity in their lives that the plane being a little later than they anticipated, or them even missing their flight and having to spend a night in another city, that's like, it just melts their whole world down. And, I just want to hug these people. Like, hey, let's just take a deep breath here.
I promise you, this guy wants 165 people out of his face.
Yeah,
as much as you want to not be in his face.
Like, what's this gate agent gonna do? Like, poor guy. I mean, I have so much empathy for people like that, and sometimes they deserve it because sometimes they can be pieces of work.
Yeah,
but most of them are just like, I'm just trying to do my job.
Yeah.
And it was a bird that hit the plane, so it's like. It's not even the airline's fault. It's just a bird hit the plane. Do you want to fly on it when we're not sure if it's airworthy? No.
Not at all.
The
other, I was gonna say the other place you can catch us is on LinkedIn. I work a lot on LinkedIn a lot.
Yeah, I think that's where I see you the most.
LinkedIn and YouTube really are the two spots we are.
Okay.
And for me and our group we spend a lot more time there than others.
Good. Well, Scott, thanks for stopping by. I appreciate it. And
thank you, man. I'm looking forward to an awesome Dirt World. I loved it last year. It was great. Awesome speakers. I congratulate you guys on what I think is a way for people to meet and network at a great conference, which is what a conference is for. But having the speaker lineup, I mean, last year was Jocko and everyone we just talked about, teaching you leadership and training with real folks, like the investment you guys make in that value. I brought 4 members of my team, but also brought 5 customers.
Nice.
And on our dime, so they could learn and educate. And the feedback we got from them, and they go to their own conferences. They're all, they're in the construction world.
Yeah.
They got more out of that than they do going to other meetings,
That's good to hear.
Because you're learning something. And then this year, with your speaker lineup again, is great. So I commend you guys on that. I know it's not easy. I'll let everybody know, like, you don't make fortunes on meetings and conventions. Those are really, those are value driven. It's not a big profit center. Yeah. So, I'll say that for you. I do know I've run plenty of meetings and they're not profit drivers. They're value drivers.
Speaking of cash flow though, it's great for cash flow because I can bill for the tickets today. And we don't have the expenses until later this year. So every time I'm talking to a big contractor, hey, how can we help you? Buy your summit tickets now, please, because we need the cash flow. So if you got a spare, if you got a few grand laying around and you don't need it, I will happily take it.
It's the equivalent of a 50% deposit if you're starting a project.
It's so nice.
But
no, I'm glad everybody got value. This year will be twice as good. And I think the coolest thing, speakers are great, but we've created a totally different event, which has attracted, I think, the best-in-class people in the industry. All the forward-thinking individuals and the companies that I think are winning. The Hoopaws, the Sargents, the CW Matthews. You can just go down the list. Those are the companies best in class. They're all there. And so you get to not just learn from these great individuals, but you get to, everybody there is really top-notch. Like the best people in this industry I've met, they're almost all there. So just like the bar, it's a completely different. I've been to enough conferences now because I'm speaking a lot. It's different. It's completely different.
I agree. Yeah. No, I like it. And I'm not a conference person. We don't go to many at all. Less than 3 a year.
Well, we're happy to be one of them.
Yeah, no, me too.
Cool.
Thanks again, man. I really appreciate it. I appreciate the opportunity. Thank you.